How many Fed hikes over the 12 months? Well, if you take the Fed's dot plots at their words, 3 or more hikes in 2019 after raising rates in December, would seem to be the order of the day. There is, of course, an inherent disconnect between the Fed continuing to put out these forecasts and the evolving economic outlook. Our sense is that the economy is beginning to slow, at least slowing down towards the Fed's noninflationary trend real growth target of around 2%. Now, with growth at trend and employment full, and the underlying toe of disinflationary forces remaining dominant, globalization, demographics, technology, and this is the Fed's view, it's easy to envision the FOMC looking at this landscape and declaring the funds rate to be neutral. Higher real yields, the strong dollar, trade disruptions, slowing growth in the emerging markets are all together pushing U.S. economic growth down towards the 2% growth mark. Therefore, after December, we believe the Fed goes one more time, and then again in March, and then stop. If the equity market is soft enough come December, the Fed will still go and raise rates, but their rhetoric, carefully chosen, will flatten the yield curve. What they'll really do is flatten their outward projections for the trajectory of their rates, and subsequently they will get a bull flattening of the yield curve, which should be supportive of the equity markets and the economy more broadly. And this brings me back to my opening point about the dot plots. The Fed is going to have to rethink their communications policy as we move to a world where they will want the upward trajectory to flatten without signaling concern about impending recession. The Chicago Fed will have a conference in June just about that subject.